Hi everyone, welcome to the Market Weekly Wrap Up. I will quickly take you all about with the key market events and the key things that have really triggered the markets, and not forgetting, the green shoots that are really there for the Indian economy. Uh, you know, Once we move ahead and once we see, the good trajectory for the Indian economy going ahead. So starting off with the FCNR and the NRE deposit boost that really came in for the foreign currency for the FPI investments for the country. So RBI in a surprise move eased the FCNR and the NRE deposit norms. They eased the norms by removing the ceiling cap for the interest rates. Also, the investments in the debt securities have been eased off, along with relaxations for the ECBs. So, why have these relaxations really come in place? So, as we see that the rupee, the dollar rupee stands at closer to 80 as of today, right? So, to make sure that the rupee doesn't fall any further, to prevent the rupee from sliding further, and to make sure that we have good investments coming in in the Forex, in the FPI sector. As of date, the YTD as of date, we have seen huge amount of FPI outflows from the country because of major global economic scenario, domestic indicators, and huge outflows going out from the country. So this a measure by RBI will really make sure that we have deposits coming in, the foreign currency deposits coming back to the country in a gradual way. So explaining a bit about the measure. So banks temporarily will be exempt from maintaining the CRR and the SLR ratios for the new deposits that will really come in from the NRI space. The interest rates on these deposits were earlier capped. There was a capping which was linked to the ARR, which is the alternative reference rate. So this capping is now removed. The FPI investments in debt were earlier subject to, only through a few securities. Not all the securities under GSEC were allowed by the FPRs. So now the 7-year and the 14-year tenors will also be accessible to the FPI investments, which will give a good boost to the the debt investments in the GSECs. The ECB limit has also been raised to 1.5 billion. So talking about these forex inflows being a really good boost to the economy, not forgetting there are few green shoots that are in place for the country. This starting off with service PMI. So services PMI touched 59.2 in June, which is a decade high, which shows that the country is growing at a healthy rate. Country as of today has a forex reserves of closer to $590 billion, irrespective of whether rupee is, irrespective of the outflows going in from the country. We have a good cushion that is available to make sure that the balance of payments will be taken care of. The bank credit is seeing a huge uptick, which is 80% growth on a YOY basis, irrespective of the banking sector seeing a huge effect because of the pandemic. There's a huge growth coming in from the retail space. GST collections have been crossing over 1 lakh crore for 11th months, at a stretch. So in spite of the macroeconomic concerns, in spite of the inflation levels that we are in, there's a huge growth coming in GST sector as well. Along with that, a few macro data points like CPI, inflation, right, standing at 7.01, manufacturing PMI standing at 53.9, IIP growth, as of the last month, saw a huge growth of 19.6%, right? So, good green shoots available for the economy, to withstand the shortfalls. Talking about the equity markets, the week went by volatile for the markets because Nifty and Sensex both were down for the week. Earnings calendar is on the track, and we expect the Q1 FY23 earnings to be rolling out soon. The companies are well placed to benefit from the interest rate cycle are companies that have good quality management, they have good liquidity, they are low levered companies. And the main sectors that are really will benefit from this interest rate hike are sectors including banks, defensives, pharma, FMCG, among others, right? So, talking about the outlook, we believe that RBI will continue to efficiently manage the yield curve, and we expect RBI to take good measures for the long-term growth of the economy. The yield 10-year GSEC is expected to be in the range of 7.3 to 7.6, and we recommend to invest in securities and bond instruments with a medium-term horizon of 3 to 5 years. So that's it from my side. Thank you so much.